And now I'll just start streaming it on YouTube and we will get started there. Okay, I think we're good. So how did you do, guys, today? You're green, Harbinder. That's good. Amazing. Oh my god, that's a lot of notes there. Let's see what you did there. So first of all, let's take a look at the bigger time frames, right? So you were watching the SPY and your Microsoft trade was based on what the SPY was doing, right? That's actually smart. And guys, when we are trading something which is following the SPY, I personally don't love trading stuff which are following the SPY, and because sometimes they just stop following it at certain moments. And if you look at the SPY and at Microsoft, SPY was holding above VWAP, right? And then it went below VWAP, while Microsoft all the time it was holding below VWAP. This next thing, if you are going to watch here, is this drop here. On the SPY, it was sort of like this, green, red, green. On Microsoft, it was sort of different, right? So basically, it wasn't following it literally, but it had some influence out of the SPY. And you can see that from this top, 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 and the same thing with Microsoft, lower, lower, and lower, and lower highs. So yes, it's following it, but it's not following it like exactly to the penny. It's kind of independent from it. So let's see what he saw. Harbinder saw a pennant forming, right? This is not an ascending triangle, not a descending triangle, because you have higher lows on every wave and you have lower highs on each wave after that, right? Once it's breaking this pennant right here, taking it to the long side, right? The same time, look at this, guys, it's 1240. This entry is at 1240, right? This is 1245 right here. Basically, the SPY broke up the downtrend right here. There it is, the break, pulling back and coming back up. So you see here that the downtrend was actually broken. It pulled back, held the support at around 1240. This is 1240 here. And then it's breaking up with volume. And this is the entry for Harbinder. I really like how you combine both the movements of the SPY and of Microsoft. Taking it to the long side, stop loss below these 1 minute candles. And I think that's more than enough. You don't need to put your stop loss down here. Why is that? Because if a stock is breaking up, most likely it's not going back down into the range. So no need to have your stop loss at the low of the range. Good entry, good stop loss, and adding some with free rolls. Now here I wouldn't have added. I definitely wouldn't have added here and here on Microsoft moves. Why is that? Because this is the breakout. After the breakout, it could go a little bit up to the resistance area, pull back, and because you added with free rolls, instead of having your average here, your average became somewhere here because of those ads, right? Basically, it could get you stopped out and then go without you. Luckily, that didn't happen. It touched the resistance area where you have taken a partial. It did pull back, right? Now this is good. If you see this happening here, it's holding, it's holding, it's holding, forming sort of another pennant, breaking up, and you're adding. Now this is good. This is a good add because here you could have a stop loss somewhere here or stop loss somewhere there right after the breakout, because after it's breaking out, it's not getting back down into the range. You added at the breakout area, which is still not bad. You could also add right here and have even a tighter stop loss somewhere in the middle of the range. This add here, again, I wouldn't have done that. Why is that? The breakout happened, right? And it could just simply go down and get you stopped out. We need to add after pullbacks or at breakouts after the pullbacks, not on the moves to the upside, right, Harbinder? But other than that, you did amazingly well. I see that you partialed the last somewhere closer to this moving average right there and exited the rest once it got back down into the range. And I like the last exit. Even if I didn't exit here because of my average, I would have exited somewhere down here. And why is that? Look at these, guys. This is the previous resistance, right? The previous resistance acting as a support. It's breaking out as a fake breakout, and then it's getting back down into the range. Once the stock is getting back down into the range, this is a weak sign, and there is no reason to actually hold on to it for more room, unless you have really small share size and you hope that it will do a higher low wave on bigger time frames right there. So look at this. This is your first entry on the 5-minute chart, right? Adding at the top of the 5-minute chart, this is what I would have avoided. 1, 2, 3, 3 candles. This is what I would have avoided. This add right here was good, right? On the 1-minute chart, it's at a breakout, but if you combine it with the 5-minute chart, you could have got a little bit earlier entry, right? Because you see a higher low wave and making a new 5-minute high right there. Adding at the view up, I wouldn't have done that. Why is that? Because it's 1, 2, and this is the third candle. It's better to get it on the first candle. If you can't get it on the first candle, you can try to add it on the second candle, but the third candle is usually a little bit late, because you see it just can't break out after the third candle, and then it's coming back down into the range. But really good trade right there, good management, and good ads right there. Ayman, how do you calculate your share size so fast? Given your entry stop loss risk, don't miss a 1-minute frame while doing that. Sergio, I have a hotkey. That hotkey calculates my share size depending on my stop loss and the current price. So I don't do any calculations. It's the hotkey. Please throw a little light on wild trading parabolic reversals when it's double top bottom on the 1-minute chart. What you look for entering in specific volume. I'll do that, Chetan, once we get through the similar trades, and I see a lot of members are actually trading with those parabolic reversals, so we'll get to them and I will talk about that in detail. So Julian, Ayman, your rule not to enter on the third candle is on the 5-minute or on the 1-minute chart, sir? Julian, it's on the 5-minute chart. Good job, Harbinder, and you're welcome. So Julian traded UAL, right? And I see that this was actually a long right here, right? So look at this. UAL, if we look at it today, it was more on a downtrend than on an uptrend, right? So it's more weak to the downside. It found some sort of bottom here. It did sort of a parabolic reversal down there and came all the way up to view up, right? You see, it's going up right here, doing sort of an ABCD pattern or a bull flag right there, breaking all the way up to view up, right? And after the break of view up, what do we have here? A red candle, right? So there was a breakout, but that breakout wasn't that strong actually. And then it's followed by a red candle, and you are taking it to the long side. And I know why you took it to the long side. You took it to the long side mostly based on the 1-minute chart, right? Because it was forming an ABCD pattern on the 1-minute chart. If you combine though the 1-minute chart and the 5-minute chart, this wouldn't be the best ABCD pattern there. Why is that? This ABCD pattern to the long side is on a bigger time frame downtrend, right? The next thing, this ABCD pattern on the 1-minute chart is formed after a red candle with an upper wick on the 5-minute chart. So this trade right here, I would have avoided. Now let's see the second trade you've taken. The second trade you've taken was to the short side. This trade I like more. Why is that? UAL is mostly downtrending on the 5-minute chart. It's pulling back on the 5-minute chart, right? Continuing the downtrend on the 5-minute chart, and you're taking it to the short side. One thing I wouldn't have done is having a tight stop loss on this thing, right? Because after 3 consecutive candles, no matter whether they are big or small, especially if you're going with the trend, stock could just do a small pullback, right? So you can't have a tight stop loss based on the 1-minute chart after 3 consecutive candles on the 5-minute chart. What's the high of the consolidation here, or what's the level which the stock bounced off right here? I will not use the high of the wicks as I usually do. I will use at least a little bit above the body. So if I take it to the short side here, the technical stop loss after my entry, at least for the current moment, is a little bit above the body, okay? Until the moment I see that it's making a new 5-minute high, making a lower high wave, and forming a new 5-minute low. After that, you can add to your position and move your stop loss from here till this level right there. That's what I would have done. But taking it to the short side on the way down and having a tight stop loss because the entry was late, this wouldn't have been the best thing. And you see that you were in the right position. It did actually continue going lower, but at the moment where you entered it, the stop loss wasn't the best. Okay, that's good, Julian. So Btank, let's see what you did. Btank traded Apple, the catalyst, it was WeChat ban, setup, parabolic reversal. So Btank traded a parabolic reversal. He had a stock which had a catalyst. The indicators which he had, price is too extended from the 9-moving average on the 5-minute chart. You see these guys? It is so extended from the 9-moving average on the 5-minute chart. I don't know how I didn't see that, by the way. Now, 3 consecutive 5-minute candles. Let me actually zoom it in. 3 consecutive 5-minute candles. 1, 2, 3, right? What the other indicators you had there? You saw a shooting star at 9:36 on the 1-minute chart. And the stop loss was slightly above the body of the shooting star. Wanted to get a 4th one and you got a 4th one. So let's see the 1-minute chart now. We saw the 5-minute chart. We saw that it's extended from the 9-moving average in the 5-minute chart. We saw 3 consecutive 5-minute candles, right? Now, let's see the 1-minute chart. On the 1-minute chart, good thing. We have a daily level, right? And we're having a shooting star. And by the way, guys, I love it so much when we're having a shooting star after a hammer. So the hammer, as I said, I don't love this is called hanging man when it's at the high of the trend and it's a reversal indicator. But because the price got pushed back up, I don't like it much for a reversal. When I see that it got pushed back up and it did actually break, but fake breakout, and then it's getting pushed back down, closing as a shooting star, this shows me weakness in this price action here, and I love it more for reversal. This would be somewhere a plus reversal for me. No volume indicator here. It's not necessary, right? But if you have it, it's good. Taking it to the short side on a new 1-minute low. Stop loss slightly above the body. And then go for the downtrend. And he got a 4 hours in this one. This was a good one. So one thing which I'd recommend to do, it's something I also need to do. Always leave at least 5 or 10% of your position, especially after a new 5-minute low. Just let it run till the next technical level you believe it might reach. That's just for practicing to hold to your winners. I don't do that as well. I also need to practice that. But if we do that and we become good at that, winners will be even bigger than they are. Good job, Btank there. Now let's see the next trade there. Let me actually open YouTube. I guess I lost it. There it is. Lenny, let's see what you did here. Lenny traded AAL, and this was a long setup for Lenny. This is not a bad long setup. Why is that? Look at these guys. AAL in the pre-market mostly holding above VWAP. Before the market opened, it dropped below VWAP. At the open, it's squeezing above VWAP and above the moving averages and above the high of the pre-market. So looking at the 5-minute chart, the stock is bullish, right? Making a huge move to the upside, dropping down, right? Continuing the upside, you see we're having new 1-minute lows here, dropping down and coming back up. On the 5-minute chart, we had an engulfing, which is a weak sign, but after the engulfing, it continued going higher, right? Now, if it made a new 5-minute low right after the engulfing, this would have been an engulfing crack setup, and it's a short setup. Since it didn't do that, it continued to go to the upside. It engulfed half of the candle. On the 1-minute chart, we're having confirmation candles, almost an engulfing, and then a hammer, taking it to the long side right here, but unfortunately it's getting you stopped out. And personally, I would have used the same stop loss here, because I see that this level is kind of holding right here, right? Taking it to the long side, getting back down, getting you stopped out, and that's it. Not the worst setup. It's definitely better to have a stop loss a little bit lower or maybe down there, but that's actually too much for AL. I wouldn't have done that as well. Stop loss was good, you get stopped out. Unfortunately, the setup just didn't work out there. But I believe it was a good one. Looking at the 5-minute chart, above VWAP, above all the moving averages, above the pre-market high, right? After the drop, it came back up, had the confirmation candles on the 1-minute chart, almost engulfed it on the 5-minute chart, taken it after confirmation candle, breaking out by a fake breakout, this candle would have definitely made me scared out, and I think it did for you as well. But anyway, not bad setup. Unfortunately, it just didn't work out. Daniel, let's see what you did there. So Daniel traded NIO. Let's say the daily chart. On the daily chart, NIO gapped up. It's still in a range, right? No, I think, yeah, just a little bit lower. Below the wicks would have been good, Lenny. But even that stop wasn't bad, especially after the hammer. Anyway, looking at NIO, it gapped up, a little bit long biased, but not so long biased because it's still within a range on the daily chart. So yes, it gapped up, but still, since it's trading in a range, I could trade it either to the long side, either to the short side. 15-minute chart, holding above view up, holding above the moving averages. 5-minute chart, the same thing, definitely long biased on it. At the open, it's squeezing to the upside, right? Pulling back right there. Now look at this. On the 5-minute chart, you're having a bearish engulfing sandwich, which is a bullish setup right here. After this setup, once it makes a new 5-minute high, this would be a good place to take it to the long side. Now let's see the 1-minute chart. The 1-minute chart, though, I wouldn't have taken it to the long side here. And guys, would you have taken it to the long or no, and why? There is one reason not to take it for me. So the 5-minute chart, I like it. It's bullish. 15-minute chart, it's bullish. Daily chart, it's decent. It's not bad, right? 2-minute chart and 1-minute chart, there is a reason for me not to take it. Like, if you had taken it somewhere here, it wouldn't be the best, yes, but it would make sense and it will be kind of safer. After this price action here, I would be less confident taking the trade. Wicks plus no W shape, still within range, and the doji. Exactly, I don't like the doji. At the top, it made sort of a double top with a second top lower than the first one. A double top, second top lower than the first one, right? There are 3 indecision candles on the 1-minute chart, 2 indecision candles on the 2-minute chart, and then it's making a new 2-minute low and it's making new 1-minute lows. Because of those candles, I would have been hesitant taking it to the long side, because now we have another pivot point forming right here, right? And even if it makes a new 1-minute high here, I would not be so confident it's breaking the highs of this. Basically, I would have liked it to the long side once it's breaking this level right here, 14.25, just to make sure that this indecision candle and this push back down is getting back in control by the bulls right here, right? Now it's a double top with the second top lower than the first one. Double top with the second top lower than the first one, while still being extended from the 9-moving average on the 5-minute chart, right? Not the worst setup still, again, it was decent. But looking at the smaller time frames, the setup wasn't fully ready yet. So Mu'in traded WFC, and I see what you traded for. It was a parabolic reversal, I guess, right? For me, it wasn't so parabolic yet. It's around 20 cents only from the 9-moving average on the 5-minute chart. It's 1-2 consecutive candles only. This was an ABCD pattern, so yes, there were still no pullbacks, which is decent. The 1-minute chart is not so clear, so we're having fake new 1-minute lows here. We're having a double top with the second top lower than the first one with the fake new low here. Coming back up, dropping down, coming back up, dropping back down. Basically, so many new lows, after which it was coming back up. On the 5-minute chart, what I like is this candle at least. You had almost an engulfing, and you have again a double top with the second top lower than the first one, and a reversal candle on the top right there. So it wasn't an A+ parabolic reversal for me, but it was still decent based on this weak candle on the new 5-minute low and this double top with the second top lower than the first one. If this entry would have been taken here, I would definitely not like it, because I saw fake new 1-minute lows before, right? And this could be another fake. And because you waited for a double top with the second top lower than the first one, there was an extra confirmation, and this setup definitely was better. Not the best, but still it was good. One thing though, so many early partials, right? And look at that, because of the early partials you have taken here, you've been stopped out, right? And remember that price action is not going like this, right? It's not like close, open, close, right? Open, close, open, close. And we're saying this in every trade review. Just as a reminder, it's could do something like that, right? Or it could do something like that. First it's dropping and then it's coming back up, or maybe it will drop and then on the next candle it will come back and then it will drop, right? So if your entry is somewhere here and you are taking a partial somewhere down here, your stop loss is automatically at break even. This wick down here will get you stopped out, and that's exactly what happened here. You're taking it to the short side, you're taking some partials, and the next candle it's getting you stopped out, and then it continues to go to the downside. I like that you still were confident about your setup and you still re-entered, but what's the bad thing here? The downside here is that your entry is worse than the first entry, and the stop loss should still be at least somewhere down here. So now your average is bad. If you get so tight of a stop loss, in this case it did work out, but most of the time it will not. It could just simply wick a little bit and then get you stopped out. And then the same thing happens here. It goes a little bit in your favor. You take some early partials on the first 1 minute candle, and the next candle you are getting stopped out at break even, and you are missing the move right there. So what to do in this case? And by the way guys, I am getting stuck in this position sometimes, and I think I might add a new rule. If I get stopped out on the very next candle, I will not have my stop loss at break even. Okay, on the third candle I might have it at break even. If you guys read Mark Douglas' book, what does he say? After the first partial, let's say you are getting in here, okay? Your stop loss is somewhere, let's say here, okay? And this is your 1 hour. He says that if the stock is going into your direction or in your favor, and you are taking partial at 1 hour, let's say 30% partial, right? You are up 0.33, right? Now, if you move your stop loss to break even, you might miss the whole move. He says that you should not move your stop loss to break even, and you should still respect your original stop. And if you get stopped out, in this case you will not have a full 1 hour loser. You will have only 0.33 loser, right? Basically you will turn out your winner into a loser, but it will be only 1/3 of a loser, right? Now that's good, and I like that analogy or that idea of Mark Douglas. Why is that? Because break even isn't a technical stop loss. When you're getting into a trade, your technical stop loss is here. This is the place where you believe that the stock might get to and drop down, not this, right? Break even is a stop loss which we made so that we don't give back our profits, but it's not technical stop loss. Now for parabolic reversal, if you are taking it to the short side and you are taking a partial, on the very next candle I prefer not getting stopped out at break even. Why is that? Because we know how the market is being traded at, right? It's good trade within the range. So take a partial. If it's going to your break even on the next candle, just ignore it. Have it at least at a new 1 minute high. If you survive it and it goes in your favor, that's good. Now after the second partial, you can have your stop loss at break even. Why is that? Because now break even is on a new 1 minute high. As long as break even is within the 1 minute candle, better not to have it at break even. When it's not within the 1 minute candle and then it's coming back up, now you can have it at break even, at least that. And that's something I will start implementing, because looking at my journals, I'm missing a lot of moves because of this. Taking a partial and getting stopped out, the rest at break even. There are a lot of resistance, would you still? Yeah, exactly, Beating. And this is how you trade parabolic reversals, right? You go against the supports, right? With the target, the non-moving average in the 5 minute chart. You can't take parabolic reversal when it's so far from the non-moving average in the 1 minute chart. The 9 and the 20 moving average, they are always close to the price action, right? So no matter what you do, you will still be going against the 9 moving average and the 20 moving average. How are you for parabolic reversal? Just a quick question. Are you moving your stop loss at break even when you take the first partial? Yes, I move it to break even, but it's something I'm going to work on based on what I explained right here. It's trading in the zone, Klaus. So let me actually move the chat to always scroll down. If this was 2 to 1 or 3 to 1, I would also take a partial here. But if not, I will continue holding on till it gives me my 2 to 1 or 3 to 1. There will be small partials, 20 or 30% maximum, and add the 9 moving average in the 5-minute chart, it will be 70% partial for me. So John, let's see what you did. And then we're having Charles. So John traded pen, and I see what you did there. Also parabolic reversal, 4 consecutive candles, kind of far from the 9 moving average on the 5-minute chart, right? You are taking it to the short side on a new 1-minute low, stop loss kind slightly above the bodies, and you get subbed out. You re-enter on the setup, and this one turns out to be a small winner, and the rest out at break even or closer to break even. So here getting subbed out at break even is a smart idea, because you get subbed out at break even on a new 1-minute high after a hammer. Now look at this. It's something I talked about yesterday, right? The 4-bar play. So with the 4-bar play, I would have avoided this entry right here. Why is that? First of all, we're having a bigger lower wick. So I'm definitely not taking it to the short side on this candle, okay? Now, you're having a new 1-minute low here, but this new 1-minute low is not after a reversal candle, it's after an engulfing. This is not literally a doji, and it has still has a bigger lower wick. So this entry I would have avoided. This entry right here I would have also avoided. Why is that? Because it's sort of an engulfing. Again, not literally engulfing, but still it's sort of an engulfing. Now looking at this, bullish, bearish, bullish, bearish. I'm having the 4-bar setup. Then I'm looking at the 5th bar. The 5th bar, I want it to go a little bit to green. After green, it's going back to red. Once it hits the red, I take it to the short side. I have my stop loss at the high, and then taking partials all the way down. This is what I mean by 4-bar play. I don't take it on a 3rd bar, which is this, right? Green, red, green, and this is the 3rd. I don't take it after the 3rd. It's safer to have it after the 4th. It's something I noticed after journaling as well, and I'm playing it a lot. It's so safe to have it on the 4th play. But one important rule is to have the bodies or the range of the 4th bar close to each other. You don't want it to be something like that, or something like that, or something like that. You want them to be in the same range. So yeah, for me, the entry on this setup, if I was looking at it for parabolic reversal, would have been here. Now let's see Charles. Charles traded UAL for a parabolic reversal, right? So the first time you took it in the pre-market to the short side, we get stopped out, which is fine. Then it's dropping down. This is the 1-minute chart, I guess, as well. No, it's not the 1-minute chart. Maybe the 2-minute chart. Anyway, I don't think this is the 5-minute chart. It's definitely not the 5-minute chart here. I think it's the 2 maybe. Anyway, it's dropping down, right, guys? At the low of the day, closing as a hammer with increasing volume. Now, this is not climactic volume. This is increasing volume right there, right? Having a new 1-minute high. After that, 1-minute doji or hammer with bigger lower wick. Stop loss slightly below the body, which you did right there, I see. And then you go for the risk to reward all the way up there. Now, yeah, this was a good one. I like it. Dropping down a lot. Daily level on the way. Forming a hammer or a bigger lower wick. It's a green body candle with increasing volume at the low of the day. And then you are partialing all the way up. So, yeah, this was a really good one, Charles. Now, let's see what you did after that. It's continuing to drop down there. Getting into a daily level. And you are taking it to the long side there. Now, this I would have avoided right here. First of all, I don't have a reversal candle. I have a bigger upper wick. So this candle right here, this candle wouldn't have been my entry definitely. Now, after that, we're having an engulfing, right, guys? We're having an engulfing here, and I personally don't love taking them after engulfings because the risk to reward gets messed up. What I like about what you did right there is you still respected the stop loss. The stop loss is the law of the body, right? You can't just have it within the 1 minute candle because you decide to have a tight stop loss. So at least you did that really well. And then you are partialing all the way up. It's dropping down. You are adding in with the doji. This I also like, and I would have done the same thing if I missed this entry, because now we are having a double bottom with the second bottom higher than the first one. We are having a doji here. If you are taking it the last few seconds before the candle close, it's good. If you are taking it somewhere within the first 30-40 seconds, I wouldn't do that because this candle is still not closed, right? And we're not sure if it's going to close as a doji or no. If it's the last few seconds after the doji, before the doji close, it's good. Way safer place would have been taking it at a new 1 minute high after the doji. So yeah, that was really amazing. I like it. This ad I definitely wouldn't have done. Why is that? Doji at the high of the day starting to pull back, and it could actually form a double top with the second top lower than the first one, especially that we are on a downtrend right there. But yeah, really good trades. I love them. Ralam, let's see what you did there. Ralam, you can send another picture. I'm deleting this one. It has your account number there. Guys, make sure when you're sending the pictures or screenshots to have your account number hidden there. Now, let's see this trade here. Tom. So Tom traded L, and let's see what you had there. 3 consecutive candles on the 5 minute chart, right? 1, 2, 3. It's actually the 15-minute chart. That's the 5 minute chart. Okay, so you're not taking it for a parabolic reversal. I see this is the one, right? This is the second. If you take it on the third, somewhere down there, or at the beginning of the third, that's good. On a new 1 minute high, somewhere here, right? And I guess you missed that entry. You took it a little bit later. Looking at the 1 minute chart, buying pressure, buying pressure, buying pressure. Along with that, you're having a new 5 minute high. So you're taking it a little bit late. I personally wouldn't have taken it here. Why is that? Look at these guys. This is the entry. This is the 9 and the 5, right? What's the stop loss? Stop loss should be technical. It should be somewhere there, at least somewhere here. And I think I will not have a good risk to reward to the 9 moving average in the 5 minute chart with this late entry right here. Yes, it was a 5 minute high, and I definitely would have expected to go a little bit in my favor, but I'm not sure how much it's going to go in my favor. And at the same time, I could expect it to start dropping a little bit before it goes into the 9 moving average in the 5 minute chart. So having a tight stop loss here isn't the best variant, right? We could just simply get stopped out on that thing. You added more to your position and then start taking partials. So I see that your stop losses, I assume, were on new 1 minute lows, especially that after the add, and because your partials were so early, stop losses were at new 1 minute lows. I'm glad that that worked out, but be careful about doing that because it could just simply do a lower high wave. Sorry, higher low wave, similar to what happened here, right? Eventually it did continue going higher. I'm not sure for how long, but what happened here could have happened here as well. And I think NIO was a good example for that today. It did eventually go where Brian wanted it to go, at least a little bit. But at the beginning, it wasn't a clear price action, right? It was making those higher low waves, choppy waves, before it finally broke out a little bit. So Hans, let's see what you did there. Hans traded BA. And I guess this is also a parabolic reversal. Looking at the 5 minute chart, running 1, 2, 3, 4 consecutive candles. For me, I don't like it so much for a parabolic reversal because look at this. Hans, I have been using a version of your parabolic reversal trade on high volume stocks like Microsoft and BA and Facebook, but waiting till the volume confirms it. The BA trade that I posted is an example. The higher volume and reversal candle increased the probability of substantial move. So far, it has really improved my success probability. I'm really happy that this actually works for you. Now, looking at the 5-minute chart, guys, it's 4 consecutive candles. I personally don't like the 5-minute chart so much because those candles are so small, and this is the breakout candle. So yes, it's 4 consecutive candles. Yes, there is good risk to reward to the 9-moving average on the 5-minute chart, but it's not so parabolic, right? On the 1-minute chart, we're having a reversal candle at the high, which kind of tells us that this was a fake breakout. Usually, when a stock is breaking out, it at least makes a small move, pulls back, previous resistance acting as support, and then it continues the uptrend, or it breaks out and it shoots up. Seeing it breaking out and immediately closing as a doji, this is not a strong sign, right? Along with that, a doji with an increasing volume, taking it to the short side, and it actually gives you a better move than expected right there. I love how much you held on to this one. Thank you, Ralam. I'll take a look at it right now. What does it mean when you see a hammer at the top of the trend? A hammer at the top of the trend is a reversal candle. A hammer at the top of the trend is called a hanging man. And the next low is a signal to take it to the short side. But I personally don't love taking those because, at least in my statistics, they make a new high. And I prefer taking these type of reversals only if it makes a shooting star after this hanging man. But still, if you take it to the short side after that hammer, it's not bad because it is a reversal candle. It just not works well for me. So Ralam, let's see what you did. SRNE, right? SRNE on the 15-minute chart, it's strong, right? It's holding an uptrend right there. On the 5-minute chart, it's breaking the previous 5-minute highs, breaking the 1-minute consolidation. So you are taking it for 1 minute open range breakout after it made a move smaller than the average true range right there. This is a small move. It's only 20 cents move, somewhere around that. And it's close to view up and it's breaking a point. Along with that, it's making a new 5-minute high in comparison to the 5-minute candles in the pre-market. And this was a really good 1-minute opening range breakout. Pulling back down, getting you stopped out, not at break even. And I see that you got some FOMO. You regretted exiting so early, especially that it didn't even hit your break even and you decided to re-enter into this setup for a 5-minute opening range breakout. Now, yes, it was a 5-minute open range breakout on the 5-minute chart, but what do you have on the 1-minute chart? On the 1-minute chart, you are having, first of all, an engulfing, and then you are having a bigger upper wick, which indicates selling pressure. This is a weak sign for the bulls. You're taking it to the long side and getting stopped out. So yeah, this entry I would have avoided despite us having a 5-minute open range breakout. See guys, it was a 5-minute open range breakout. But the 1-minute chart wasn't so clear. The 1-minute chart showed us that there is more selling pressure, and this is why I love combining different time frames. So yeah, I would have avoided this entry right here. Now let's see what you're doing right there. Stock is dropping down, breaking the low of the day, and this is a fake breakdown, right? It broke the low of the day, but it didn't continue going lower. What is it doing? It's doing a higher low wave, and then it's starting to form sort of an ABCD pattern on the 1-minute chart. We're having a hammer on the 1-minute chart, and we're having increasing volume, but that increasing volume came actually after. So let's ignore that. We're having confirmation candle on the 1-minute chart with bigger lower wick. Let's see what we had in the 5-minute chart at that time. At that time, on the 5-minute chart, we're having an ABCD pattern, and you're getting as close as possible to the non-moving average on the 5-minute chart. This is amazing. So, two good entries here. Your entry here was decent. You anticipated an ABCD pattern after a fake breakdown right here, and you based your entry on the 1-minute chart after the confirmation candles, right? Even without having a new 5-minute high. That's good. Safer entry was to wait for a new 5-minute high after a 5-minute hammer, right? And then go with the trend up there. So yeah, this was good. This would have been good. Both are amazing, and I like this trade as well. Good job on this one. Some ads on the way up, I see. Oh, this parabolic reversal actually. So you shorted it here, and I like that as well. What do we have? 1, 2, 3 consecutive candles. stock extended from the 9 moving average in the 5-minute chart, right? Taking it to the short side on a new 1-minute low. I personally would have avoided this here because of the bigger lower wick. You took it and it worked out fine for you. Taking it one more time to the short side. Now here I wouldn't have done that. Why is that? Because it's starting to form higher low waves, and in the 1-minute chart it looks like it's forming an ascending triangle, and it already got as close as possible to the 9 moving average in the 5-minute chart. It's not necessarily going exactly to the 9 on the 5. Sometimes it's getting closer to it, sometimes it's touching it, sometimes it's going a little bit below it. So here you see it tried to do that, it got closer to the 9. That parabolic reversal didn't work out, and it's making new highs. So basically the parabolic reversal setup is done. Now just wait and watch it for another setup there. Yeah, exactly, Tom. That was smart actually. When you're trading one stock, you can pay much attention to that close price action. So yeah. Now let's see what you did here. You traded GRPN for a parabolic reversal, I see. And you took it, and I would have definitely liked to see the 5-minute chart, but it's fine. Was it extended from the 5-minute chart at this time? Let's say it is. If it is extended from the 9 moving average in the 5-minute chart. Okay, let's see that. Is that it? Yes, it is. Perfect. Now this is good. This is good. So let's see, on the 5-minute chart, on the daily chart, it gapped up, sort of bullish price action. On the 5-minute chart, we're having 1, 2, 3, 4, 5, 6 candles, right? Consecutive. Not bad to start looking at it for a parabolic reversal. On the 2-minute chart and the 1-minute chart, what do we have? On the 2-minute chart, we're having a reversal candle, and you're taking it to the short side earlier, right? Working a little bit in your favor, taking a partial, and getting stopped out. The entry wasn't bad, right? I personally would have waited for a 4-bar play here. Why is that? We're having a reversal candle on the 2-minute chart, but on the 1-minute chart we're having engulfings, and I don't like taking it after engulfings. I would have waited for a 4-bar play, which is this. What I wouldn't have liked is it breaking the low at the 4th bar play. Anyway, it's getting back to green. After green, it's getting back to red. I would have taken it to the short side here, and I would have been stopped out somewhere there, and that's totally fine. Setup just didn't work out. After that, what's happening right here? It's starting to work, and the parabolic reversal just works out a little bit later. Now look at this. Would I have re-entered here or here? Definitely no, because the setup, I don't have confirmation candles on the 1-minute chart. I don't have confirmation candles on the 2-minute chart. And yes, it worked out, but this move right here, it would have gone without me, and I would not have regretted it actually. If we use our stop loss at the high of the week, we would have survived the pullback and we would have caught the move. But I never put my stop loss at the high of the week, and I will not regret not putting my stop loss at the high of the week, because a lot of times with my setup, I see that having it a little bit above the body works out. Just not in this case. So the setup was good, your first entry was decent, you took a partial, it got you stopped out, you missed the rest of the move, which is totally fine. Yeah, like I said, I don't like taking those after an engulfing for 2 reasons. First of all, there is a setup which is called a bearish engulfing sandwich, right? So we're having an engulfing candle, then I'm taking it to the short side, and I'm afraid that that setup is going to form against me. This is the first thing I don't really like. Getting stopped out immediately after the entry. The next thing I don't like is taking it to the short side after an engulfing candle, because my risk to reward gets messed up. My stop loss becomes like literally above the high of the body. And after an engulfing and having a stop loss at the high of the body, first of all, I'm having a bad risk to reward because the stop loss is wide. The second thing, my stop loss is exactly at the high of the day. So if I'm getting stopped out, most probably after the break of the high of the day, I will get some slippage, and I'm going to have more than 1 hour loser. Those 2 reasons are the main reasons I don't love taking them after engulfings, and I noticed that they don't work a lot. Most of the time after engulfings, especially if it's a little bit away from the 9 on the 1-minute chart, it touches it, and I'm getting to the short side, to the face of the 9 moving average on the 1-minute chart, and then it just going against me. So Nabil, let's see what you did there. Nabil traded CCL to the short side. Now this I wouldn't have done right here. Look at the price action, guys. Going down, coming back up, higher low wave, higher low wave, lower high wave, lower high wave. Yes, I see that it's more weak than it's strong. Look at the 1 minute chart. It's weak, right? At the low of the day, starting to get buying pressure, buying pressure, buying pressure, fake breakdown, buying pressure, doji, engulfing, new low. So basically it's kind of choppy, and having a stop loss at a new 1 minute low somewhere here is so tight. What I like about what you did right here, Nabil, is that you put your stop loss at a technical level. Yes, you got a little bit of a late entry right here on the 5 minute chart, right? But at least your stop loss was technical. You had it at the high of the previous wave. Now, looking at the bigger move right here, or at the bigger picture, what do we have? We see that it's actually weak. It's pulling back, parabolic pullback. It's dropping down, right? We are not taking it on the first new 5 minute low, not here and not here, because this might actually be forming an ABCD pattern to the long side. What do we usually wait for? We wait for an M shape, and there it is. We're having an M shape ready somewhere here after this confirmation candle right here on the 5 minute chart. I'm not sure what we had there on the 1 minute chart. If we had buying pressure wicks, I would have taken it earlier. But looking at this, I would definitely like this entry more for the reverse ABCD pattern. A, B, C with an M shape right there. Good confirmation candle with a bigger upper wick, taking it to the short side there, and then try to get the risk to reward out of it. If it's giving it, if it's not giving it and it's squeezing back up and getting you stopped out, then that's fine, right? Now it's dropping down, you're getting the entry a little bit late, still having kind of a decent stop loss, but the price action is late. And looking at it, 2 candles pull back, 3 candles pull back, like this is the major move. This is the move it's making, right? Before pullbacks, just look at the average of this week, right? Most of the time, if you see the average of this week, this is what it's making before the pullback. And basically when you entered it, you entered exactly at the peak of the average move on this stock. This is why on these type of steps, we need to actually focus on the entry. If the move is already gone or half the move is already gone, then better avoid it, because we can't expect it to just continue all the way to the low of the day, right? Or straight back down to the low of the day. There is a video, Eric, about the parabolic reversals. It's a success webinar, how to catch a falling knife. I did it on the 2nd of July. Extreme reversals, I am doing one in the beginning of September. Now IF, let's see what you have traded there. And then we're having some. So traded NCLH. Now this is decent. Why is that? You see that the moving average is crossed, which is an indication of the trend. Like they were sloping up, it was strong. Now the moving average crossed, and this is an indication that this is the beginning of the downtrend. I like that, right? It's getting below the moving averages, below VWAP on the 5 minute chart. I like that as well for the short. On the 1 minute chart, look what you did. You took it to the short side on the way up. We don't know what's the end of the pullback, right? It could be here, it could be here, it could be here. But as long as it's making higher highs and higher lows, I would avoid shorting it. What's the end of the pullback? The end of the pullback is at least, that's not enough, but at least the moment it makes a new low, right? If you take it here, put your stop loss somewhere up here, you would survive it and you would get a move, right? But this would not be enough for me to take it to the short side. This is the least you can look for, just to avoid getting chopped on the way up, right? What would I wait for? I would wait for at least an M shape right here, because this pullback was so big right there, and an entry somewhere here would have been decent. Looking at the 5 minute chart, you're having selling pressure wick right here, which is decent. After red candle, right? Like green, red, green, red, and another selling pressure, new 5 minute low on the 5 minute chart. This is looking really good, and this candle is happening somewhere at 9:55. So somewhere around 9:55, and I guess this would have been it would have been somewhere right there for an entry. So yeah, definitely wouldn't have taken this thing because it was going on the way up. And the last trade we're having is NKLA here. I like this thing. What do we have? We see it's selling off. It's pulling back, right? Pulling back again, going up, pulling back, double top with the second top lower than the first one. weak sign, definitely not taking it to the long side, right? Because it might be dropping down, and it is actually dropping down. But look what's happening here. It's still making a higher low wave right here and getting squeezed back above VWAP, getting into the range. This is the range we had, right? It's kind of obvious that we're having a range here. It's breaking that range, and after breaking the range, it's getting back into it, which is showing us that this is not so weak after all. It's also getting back above VWAP, starting to hold above VWAP. Kind of choppy here. I would not have taken it to the long side here, to be honest. Why is that? Because it's stuck between a resistance and between a support, and it could go literally anywhere. What I would have waited for is it clearing the wave here. Somewhere here, when it's starting to break. That would have been better for me. Still not bad. I like that you decided to trade to the long side more than the short side, because it got back into the range after a fake VWAP breakout. So yeah, that's it, guys. If you have any questions, feel free to ask. If not, we can actually be done for today. Alright, you're welcome, everyone. And by the way, if guys, some of you are shy to share the losing trades here. I want to tell you that there is no shame to share the losing trades. I get some emails with the losing trades for members who don't feel comfortable sharing it, and I want to tell you guys there is no shame sharing your losing trades. We all have it. We have even worse trades than you can imagine, right? Which are not setups, chases, averages, breaking our rules. All of us are doing that. Feel free to share those trades, because we'll learn from the losers sometimes even more than we learn from the winners. Trade safe, everyone, and talk to you in the chat room.